Good morning or good afternoon, everyone. My name is Mindy Gayer, and I'm the Southeast Region Business Development Manager for the Entrust Group. Today, during this webinar, we are going to discuss purchasing your first real estate property using a self-directed IRA. And my hopes that are after this presentation, you will have the basic knowledge needed to feel empowered enough to do further research on buying real estate inside of a self-directed IRA. Have a quick disclaimer before we get started. The Entrust Group does not provide investment advice, tax advice, or legal advice. So we're not CPAs, we're not attorneys, and we're not financial advisors. We do not recommend or endorse any investments, products, or services. And all of the information in this presentation is for educational purposes only. We do recommend that you do seek tax advice, legal advice, and investment advice before entering into any sort of investment. Okay, during the webinar, I'm going to quickly review who the Entrust Group is, provide a quick overview of self-directed IRAs and their benefits. We're going to talk about how to plan, purchase, and maintain your real estate purchase inside of an IRA. Discuss the rules around self-directed IRAs and some of the common mistakes. Then I'm going to open it up at the end for a live Q&A where everyone will be able to ask questions. So you can go ahead and start typing your questions in the questions box as I'm going through the presentation, and then at the end I'm going to open it up for the live Q&A. All right, first I want to share a little background on our company for those of you who are not already familiar with the Entrust Group. We are self-directed IRA record keepers and custodians who specialize in holding alternative assets inside retirement accounts for our clients. And we have been doing this for nearly 40 years. We have around 22,000 accounts, and that makes up about $3.6 billion in investor assets. One of the factors that makes Entrust unique is our single point of contact business model that we offer our partners and clients when they open an account with us. And we offer this business model because we understand that this area of business is much more complex. So we provide a higher level of customer service to our clients and partners. Most of our staff here at Entrust hold the CISP designation, which is the Certified IRA Services Professional designation. We offer national continuing education classes for realtors and CPAs. We also hold national and local events and webinars. And we also sponsor the IRA Academy, which is where we actually teach the course that trains other individuals in our industry to pass the CISP designation. Okay. Now that you know a little bit more about Entrust, let's discuss the benefits of having a self-directed IRA. The first being that you are able to take control of your retirement. So you, as the account holder, are able to make all of your own investment decisions, meaning that you have complete control over what you're investing in. This also allows you to further diversify your retirement portfolio. As you may already be aware, the spectrum of what you can invest in inside of a self-directed IRA is very broad. And you are also able to invest in many different asset classes. And you're able to invest in assets that you know and understand the types of risks and returns that are associated with those investments. Another benefit is the potential tax savings using a self-directed IRA. So contributions to your accounts could be tax deductible. Earnings can grow tax deferred or tax free depending on the type of account that you have. All right, so when you're planning to purchase assets inside of your retirement account, it's always a good idea to be aware of all of your account options and evaluate the type of self-directed plan that's going to be best suited for your real estate purchase. In the self-directed world, there's usually quite a few options. And as you can see, we actually have 7 different types of retirement plans that you can utilize to purchase your real estate, or actually any asset for that matter, using self-direction. So those 7 plans that we offer are traditional IRA, Roth IRA, a SEP IRA, a simple IRA, individual 401k, HSA, and an ESA. And you can use one single type of account, or you can use a combination of these 7 plans to purchase your real estate. So you can partner your accounts together. And we'll go into a little more detail on partnering a little later on in the presentation. And one side note I just want to make that a lot of people are not aware of: self-directed IRAs do not have different characteristics and eligibility as your standard IRAs. They hold the exact same characteristics. And I'm going to go over those now just so that we can touch on those. So let's review the key characteristics of our 2 most popular types of self-directed IRAs, which is the Roth IRA and the traditional IRA. Roth IRAs are funded with post-tax income. Therefore, the earnings grow tax-free and all of the distributions are tax-free once you've hit the qualified status, or once you've obtained qualified status. Beneficiaries can also enjoy tax-free distributions inside of a Roth IRA. There's also no age limits on contributions and no required RMDs, which is a required minimum distribution. So Roth IRAs have no RMDs. However, there is an income limit based on your tax filing status. So if you're interested in a Roth IRA, you'll want to check with your CPA or tax advisor to make sure that you qualify. Some of the key characteristics of a traditional IRA. Traditional IRAs are funded with pre-tax income. So that means that distributions are taxed when you actually take the distribution. Due to the Secure Act of 2019, starting in tax year 2020, there are no longer age restrictions on making contributions as long as you have earned income. So traditional IRAs used to have age restrictions. That is no longer, there's no longer age restrictions. And inside of a traditional IRA, you are required to take RMDs at the age of 72. That recently changed. So it used to be 69 and a half. Now it's 72. Contribution limits for all Roth and traditional IRAs are $6,000. And if you're over 50, you can make an additional $1,000 catch-up contribution. Okay, let's talk about the employer-sponsored plans. So we have the SEP IRA and the Simple IRA. The SEP IRA, which is also the Simplified Employee Pension IRA, allows an employer to make contributions towards the employee's retirement plan. Max contribution for a SEP IRA is the smaller of 25% of total compensation up to $57,000 per year. In a SEP IRA, you must take RMD at 72, and SEP IRAs are considered to be a pre-tax account. So SEP IRAs are generally good for self-employed individuals. Then we also have a Simple IRA. So a Simple IRA is called a Savings Incentives Match Plan for employees of small employers. And this is a retirement plan that small employers, including self-employed individuals, can set up for the benefit of their employees. The funds and earnings in the Simple plan are not taxed until withdrawn. So Simple IRA has pre-tax money. You must take an RMD at the age of 72. So again, pre-tax account, you must take RMD at 72. Simple plans are very similar to like a mini 401k. So you can have 100 employees or less. And the employer contribution for a Simple IRA, it's a mandatory employer match up to 3% or non-elective contribution of 2%. And the employee contribution is $13,500. And if you're over 50, you can make an additional $3,000 in catch-up contributions. So these plans have substantially higher contribution limits than a traditional and Roth. All right, the individual 401k plan is a profit sharing plan with 401k options. This plan can only cover any owners and their spouses. So this is for self-employed individuals or partnerships. It's not set up for any businesses with common law employees. The employer contribution is the smaller of 25% of total compensation up to $57,000. The employee contribution max is $19,500. And if you're over 50, it's an additional $6,500 in catch-up contributions. One other thing that I wanted to point out regarding all of these 7 plans, if you're not sure what plan is best for you, we highly recommend that you talk to your tax advisor or CPA to consult with them on which plan is going to be your best option based on your income and your tax situation. Okay, now that you've determined the type of account that you want to use to make your real estate purchase, it's time to evaluate the type of real estate that you want to invest in. And as I mentioned earlier, you can invest in practically anything as long as it's for investment purposes. So just to name a few in the real estate industry, you can invest in commercial real estate, residential real estate, mortgage notes, farmland, offshore real estate. And one thing that I want to note on offshore real estate is that you need to find out what that country's real estate purchase requirements are, because different countries have different real estate purchase requirements. So before investing in offshore real estate, it's a good idea to check and see what that country's requirements are. You can invest in foreclosed homes, real estate investment trusts, also known as REITs, undeveloped land, leases, tax liens. That's just to name a few. We would be here all day if I went through all of the types of investments that you can invest in. Okay, we just discussed the spectrum of what you can invest in is very large. However, it's very important to know what a prohibited transaction is and the rules associated with buying real estate inside of a self-directed IRA. So a prohibited transaction is any improper use of an IRA or plan by the plan participant or a disqualified person. And I'm going to pause there because it's also extremely important, and I can't stress this enough, it's important to know what a prohibited transaction is, but it's also very important to understand who a disqualified person is. So a disqualified person is going to be yourself, your spouse, your lineal ascendants and descendants. So that means parents, grandparents, great-grandparents, their spouses, and so on up the tree. Children, grandchildren, great-grandchildren, their spouses, and so on down the tree. Financial advisors, managers, beneficiaries, or any entity where you or a disqualified person have 50% or more ownership. So it's very important that you know who a disqualified person is and understand that you are not allowed to do business with a disqualified person. And there is one caveat to that. You can do business with a disqualified person at the initiation of the purchase. We'll talk about that a little later on in the presentation. But you're not allowed to do business with a disqualified person. And if you do, it's considered a prohibited transaction. And the IRS does not allow prohibited transactions. All right, let's talk about some examples of prohibited transactions. Borrowing money from a disqualified person. You're not allowed to borrow, or you're not allowed to lend money to a disqualified person. Buying or selling property from or to a disqualified person. So you can't buy or sell between your IRA and any disqualified person. Using an IRA plan as security for a loan. So leveraging is allowed. We're going to get into that a little bit later on, but if you leverage, you cannot use your IRA as security for the loan. It has to be non-recourse. Buying property for personal use with the IRA or plan funds. At no point are you or any disqualified person ever allowed to personally use the property that you're investing in. And then investing in a company owned 50% or more by a disqualified person. So let's say that your parents own a company and you want to invest in it and they're 100% owners. It's not allowed. They're a disqualified person. So you cannot invest into any company that's 50% or more owned by a disqualified person. Okay, so some of the rules I want to briefly go over. We already talked about this, but know what constitutes as a prohibited transaction and avoid it at all costs. Unless you want to chance having your IRA distributed and Uncle Sam collecting all of his money from you all at once if you have a pre-tax account. We don't want that to happen. Again, it's important to know who a disqualified person is and don't do business with them, again, unless it's at the initiation of the purchase. Don't perform services on the property. We also call this sweat equity. That's not allowed. Even if you're doing it for free or you're paying yourself, it's not allowed. You're not allowed to do work on the property, nor is any disqualified person. The IRS calls that self-dealing, and self-dealing is considered a prohibited transaction. All right, you can't use the property as a vacation home, even if it's just for one night. So yourself or any disqualified person is not allowed to personally benefit from your IRA's investment. Very important to know that. Be aware that you need to submit annual fair market valuation forms. So every year the IRS requires us as custodians and record keepers to report the value of your assets. So we ask that each client submits to us a FMV, which is a fair market valuation form, and those are due by January 31st of the following year. And in-kind distributions are allowed. So the only way that you are ever allowed to personally own the property, so because remember, you're not allowed to buy or sell between yourself and your IRA, but you can personally own the property, and you can do that by taking an in-kind distribution. And in-kind distributions just mean that instead of taking cash, you're actually taking a piece of the property as a distribution. So you're paying taxes on the amount that you're taking as a distribution as if it were cash, but it's property. The property is then retitled in your name. And you can take partial or full in-kind distributions. It's up to you. You don't have to take the in-kind distributions all at once, because for some individuals that can be a pretty big tax hit. So you can spread it out over the course of several years. Okay, once you've decided what type of IRA to use and have identified the type of real estate you want to invest in and have a thorough understanding of all the rules that we just went over, it's time to examine the opportunity in more depth. And it's important, examining the opportunity in more depth is a very important aspect of the process, because as the account holder, you are the fiduciary of the account and completely responsible for the performance of the investment. It's important that you understand the full spectrum of risk that's associated with the assets that you're going to be investing in. So we highly recommend that you perform a complete due diligence on the property before purchasing it. Because we as record keepers and custodians have zero fiduciary responsibility on any of the assets that you invest in. So some of the tips that we recommend for due diligence: staying compliant with the IRS. It's important that you understand all of the IRS guidelines concerning reporting requirements and prohibited transactions, which I know we went over earlier, in regards to purchasing the real estate inside of the IRA. We suggest that you evaluate the location of the property. And you can do that by researching the crime rate in the area, the median income, the occupancy, the population growth, and the school rankings in the area before entering into an investment purchase. Also, before purchasing your real estate, we recommend that you estimate the value of the property by creating a list of income and expense items. And by doing this, you can calculate the projected total costs, including taxes, cash flow, and annual income. One thing to note, property taxes are verifiable online. And so it's important that you check that out. We also recommend that you consult with your financial advisor, as always, before entering into an investment. Another suggested practice is to research and obtain the property's title and financial documents. And this is especially important for houses that were converted or that might have odd structures. So it's a great idea to confirm that the approved structure on the property's title matches the true condition of the property. Otherwise, you as the investor could possibly be liable when owning the property that violates the terms of the title. Also, researching the title, you will want to check for bad debts and misallocated capital expenses. You will also want to find out if the property has an HOA. And this is very crucial for investors to plan to rent out the property, because you'll want to make sure that the HOA allows for rentals. Some HOA, they do not allow rentals. So if you plan on buying a piece of property and renting it out, make sure that if it has an HOA that they do allow rentals. You'll also want to find out the legal classification of the property and review the bylaws. Another due diligence tip is to hire a professional to inspect the property, because they can actually accurately evaluate the condition of the property. And this includes inspecting items such as the walls, the roof, electrical, sewer line, checking for asbestos, some of the higher cost items associated with buying a house. Another idea is to create an assumptions list to use as reference during the inspection. And if the property falls short of assumptions, then you can reference those when asking for things like price reduction, item repair, or extensions on closing or the inspection. So it gives you leverage, having that assumptions list. Inspections made between the seller accepting the offer and buyer receiving the keys are considered as part of the escrow process. And we'll go into a little bit more detail on the escrow process in a few slides. All right, so after doing all of your due diligence, it's time to make the final decision to either move forward or walk away. And we recommend that in making this decision that you, number one, always play the devil's advocate. And number two, that you always be willing to walk away. All right, a couple mistakes to avoid when you're going through the due diligence process. So failing to create a plan. Make sure that you have a good plan in place and that you're following that plan. Skimping on research, never a good idea. Make sure that you're doing thorough research. Doing everything on your own. You know, I mentioned earlier hiring a professional to do the inspection. It's always a good idea to have others' input when making an investment. Overlooking tenants' needs. Getting core financing, and that includes, so I mentioned earlier that we can leverage. So getting core financing means that you might have high rates or high fees in regards to leveraging. Overpaying for the property or underestimating expenses. Underestimating expenses can be a really, really bad thing, and we'll talk about that in a little bit, but just make sure that you're accurately accounting for any unforeseen expense and that you have that reserve in your IRA account to pay for those. All right, now that you know all that encompasses the planning phase, let's dive into the purchasing phase. And as always, we recommend that you consult with your financial advisor, especially if you are relatively new at real estate investing. So I mentioned earlier in the self-directed world, you usually have lots of options. And I briefly went over the 7 different plans that, that you can use to buy real estate. Now let's discuss in more detail the other purchasing options. So I mentioned you can partner any of those 7 plans together. There's other ways that you can structure that. So the first being the direct purchase that we talked about, meaning that you are purchasing the property directly with your IRA money. With this option, your IRA pays cash for the investment property and it holds the title to the property. And you can do this using one account or a combination of accounts, as I mentioned earlier. The next option is partnering. So you can partner your IRA funds with anyone, even a disqualified person. So I mentioned that earlier. You can partner with a disqualified person at the initiation of the purchase. So you can partner your IRA funds with anyone, or even a disqualified person, or other IRA funds owned by another person at the initiation of the purchase. The percentage of ownership is going to be determined by each investor's financial contribution to the piece of property. Another option is leveraging. So if you don't have enough money to buy the property in full with your IRA accounts or a combination of your accounts, and you don't have anyone to partner with, your IRA can actually borrow money to purchase the property using a non-recourse loan. Very important to note that it has to be a non-recourse loan. Most banks and financial institutions do not offer non-recourse loans, so they are difficult to find. We do have a small list that we work with, so if you are interested in leveraging and you can't find a financial institution that will provide that, contact us and we'll get you that list. But leveraging is an option. And then the last option is buying via an LLC. So you create an LLC where your IRA is the member of that LLC. You fund the LLC using your IRA money, and then the IRA holds interest in the LLC. The title of the property is held in the name of the LLC. Some people call it LLC IRAs, some call it checkbook IRAs. The LLC name is on the title when you're buying it through an LLC. If you go the LLC route, we also recommend that you seek assistance of a competent legal and tax advisor before entering into that type of arrangement. Okay, once you have evaluated your purchasing options and you're ready to move forward, you're going to put an offer in on the property. And it's important that the offer is submitted with the correct vesting. And the word vesting refers to the title and or registration of the asset held in the self-directed retirement account. So if your IRA is buying the property entirely with IRA funds, you will want to make sure that the investment documents are titled in the name of your IRA and not in your name personally. It's important to note that a lot of times when individuals put offers in, they put it in their name personally, and that's not correct. It has to go, the offer has to go in the name of their IRA. If your IRA is partnering, it will be vested in percentages of ownership based on the contributions of each person or IRAs that contributed. If you're purchasing through an LLC, the property will be vested in the name of the LLC. We already went through that. So for example, if you're buying property in full with your IRA funds, the title, the contract, the deed, all of that is going to, the name will be vested as the Entrust Group, Inc., FBO, John Smith, IRA 1234. And of course, we always recommend that you seek legal advice before doing this. All right. Once you submit an offer, you enter into the escrow process. So we briefly spoke about that earlier. The escrow process occurs between the time a seller accepts an offer to purchase and the buyer takes possession of the home. The first part of the escrow process is the opening of an account in which deposits, so earnest deposit money or any other type of deposits or payments can be held in. After that, the buyer must wait for bank approval if leveraging is happening, secure financing, complete inspections, purchase hazard insurance, do walkthroughs, and go through the closing. At this point, the buyer may walk away from the agreement if conditions are not met or there is a problem with the property. So up until closing, the buyer can always walk away from the property. Okay, after you close on the deal, you'll want to make sure that you are properly maintaining the property. So with that being said, any expenses associated with the property must be paid from the IRA. If you're buying the property in full with an IRA account, all expenses must be paid from the IRA. If you use your personal money, that's considered a prohibited transaction, not good. Now, if you've partnered with someone, all expenses are split at that percentage of ownership. So let's say, for example, you use 50% of your IRA money and 50% personally. All of those expenses are going to be paid 50-50. The income that that property generates must be payable to your IRA if you buy it in full, not to your name personally. That would be counted as a distribution, and if you're not retirement age, you don't want that to happen. So all of the income must go right back into that retirement account. Now, if you've partnered with someone or you've partnered with yourself, again, the income is split at that percentage of ownership. So you personally own 50% of the property and your IRA personally owns 50% of the property. 50% of it goes back into your IRA and you can keep 50% of that income. If you hire a property manager, that also must be paid from the IRA. And a lot of individuals who hire property managers, it's beneficial when partnering funds because, again, if there's a partnership, there's different checks that have to be made out. So let's say that you personally own the property at 50% in your IRA, they have to make out 2 separate checks. So one check would go to the IRA, one check would go to you personally. So to help eliminate that, a lot of individuals hire property managers. It's not mandatory, but it does sometimes help to consolidate and make that process a little easier, especially for the tenants. All right, so if your IRA runs out of funds, and we mentioned this earlier, it's always a good idea to make sure that you have a nice cash reserve inside of your IRA to cover any unforeseen expenses. But if this were to ever happen, it's a good idea to have the reserve on hand, but you have options if you do run out. So the first being that you can leverage or find a hard money lender. You can always transfer funds from another IRA. So let's say that you have some IRA money sitting at a TD Ameritrade. You can always transfer that over to your Entrust IRA. Or let's say you have money in an old 401k, you can roll over that money. So you can always move money from any other retirement account. If you're eligible, you can always make a contribution. So you can make a contribution to cover any of those expenses. Or you can liquidate other IRA assets. So let's say that you have an investment in a startup company also inside of your IRA. You can liquidate that if you want, and the cash goes back into your IRA account, and now you can use that to cover any expenses. Okay. UBIT and UDFI, so unrelated business income tax and unrelated debt finance income. I just want to touch on both of these to let you know that you could be exposed to either or both of these depending on how you're structuring your investment. So UDFI generally comes into play when you're leveraging because you're not using all IRA funds, you're leveraging part of that purchase, so you could be exposed to UDFI. And I'm not going to go into great detail because I'm not a tax advisor, nor am I licensed to speak on these topics, but we do have a full webinar in our Learning Center. So if you want to learn more about UDF or UDFI and UBIT, you can check out our Learning Center and the webinar where they go into a lot of detail on those two items. And that concludes the webinar on purchasing your first real estate property inside of a self-directed IRA. If you need more information regarding today's topic, you can complete the webinar survey. We have another webinar coming up on September 23rd about offshore real estate investing. You can register for that on our events page at theintrustgroup.com. If you need more information on self-directed IRAs, you can always visit our website and our Learning Center. There's a plethora of information on there. And please follow us on social media for updates, LinkedIn, Twitter, Facebook. All right, I'm going to now open it up for the live Q&A. So if you have questions, feel free to ask those questions in the questions box on your GoToWebinar dashboard. All right, let's see. All right, the first question. If I use IRA money to buy into income property, which is under an LLC, how do I begin withdrawing my IRA money when it's mandatory for me to begin taking my annual 3% distribution after 70 years old? Well, first, it's 72, so RMDs are 72. And if your assets are non-liquid, you can always take RMD because so what happens is they take an aggregate of your retirement accounts and your RMD is based on that. So if you have other IRAs, say at a TD Ameritrade or Charles Schwab, you can take your RMDs from those accounts. Once those accounts are depleted, then if your property is no longer generating any income, then you're going to have to look at either selling the asset, or as I mentioned earlier, you can always take in-kind distributions. So you can have part of that asset re-registered in your name to fulfill the RMD. All right, can you please address how a home must be titled when buying through the self-directed IRA? So if you're buying the property in full with your IRA money, it's going to be titled the custodian's name for the benefit of client name account number. So for example, it's going to be the Entrust Group Inc. FBO, that's for the benefit of your name and your account number. All right, next question. I am one of 3 partners in the LLC. I'm not sure if there was more to that question or not. Ron, if you want to type that question again, I'm not sure I got all of it. All right, next question. If we have more than one rollover IRA, do we need to take minimum distribution from each IRA, or can we take one minimum distribution that satisfies all the individual IRA minimum distributions? I basically answered that question earlier. So you can take your RMD from any IRAs. It doesn't have to be an RMD from each IRA. So they take a look at all of your IRAs together, and you need to satisfy your RMD based on the aggregate of all of those. All right, next question. I want to invest in an LLC which will hold income property. How do I withdraw my IRA money from Entrust? Oh, I think I already answered that question. Let's see. how do I find out who my single point of contact is? I've been a client for 5 years or so and I've never had a single point of contact. Call our client services and ask them who your business development manager is. Let's see. Next question. If we purchase a multi-unit residential property, can we occupy any of the units? The answer is no. That would be considered a prohibited transaction. At no point are you or any disqualified person ever able to use the property, work on the property, live in the property, anything. All right. At retirement age, can I take 100% distribution and pay taxes on all of it without penalty? Yes, you can. And then the property would be retitled in your name. What is the difference between Entrust account and checkbook IRA? Is this the same? So that is very different. So real quickly, if you're buying directly through Entrust, the title, the contract, the deed is vested in the name of the IRA. So as I mentioned earlier, the Entrust Group, Inc., FBO, your name, your account number. All expenses associated with that property, you send us the invoice and we send out the check for that payment. All income that property generates goes right back into your IRA account. When you go the checkbook IRA route or the LLC route, as some people call it, you're actually opening up a checking account in the name of that LLC. We move the interest money over to that LLC. You invest in the assets, and the name on the title, the contract, the deed is vested in the name of that LLC. All expenses are paid from that LLC checking account, so you are doing that. And then all income is going back into that LLC account. Okay, how can I start self-directed Roth IRA? You can actually just log on to our website, and in the top right-hand corner, you'll see an orange icon that says open account. What is the deadline for funding an individual 401? Oh, that's already been answered. Let's see. Next question. I made a bad real estate investment which lost 90% of its value. How do I get an appraisal showing the reduced value so I can show it as a loss on my self-directed IRA? You can get an appraisal from a real estate agent, an MBO, a BPO, property taxes, any of that, and submit that along with the FMV, and we'll get the value updated. All right, next question. How do you best handle RMDs with real estate IRA? Do you have to liquidate the holding or distribute the entire value and pay the taxes and retitle the property in your own name? Or can you hold it in the IRA and take your RMDs out of other IRA holdings? In other words, are RMDs looked at for each individual IRA account or in total? I already answered that question. Okay, if I buy a home with my IRA and my brother buys a home right next door with his IRA, can we use each other's property? So your brother is not considered to be a disqualified person, so you are allowed to do business with siblings. Can I buy a residential house from self-directed IRA to my personal property? Can I buy a residential house from self-directed? I'm not sure what that question is asking, but if you're asking, can you buy a residential house that you personally own and put it inside of your self-directed IRA? The answer is no. You're never allowed to buy or sell between yourself and your IRA. Who can rent, manage the property? How is the money distributed at 59 and a half years? How is the money paid to the IRA? Okay, who can rent, manage the property? So anyone that's a non-disqualified, or anyone who is not a disqualified person can rent or manage the property. How is the money distributed at 59 and a half? Well, that's completely up to you. If you have cash, you can start taking cash distributions, or if you want to do an in-kind distribution, you can have the property retitled. And again, you don't have to do that all at once. You can do partial in-kind distributions. Can you use the property for personal use if it's only partially distributed? So you are not allowed to personally use the property until your IRA is no longer any percent ownership. So even if you are 99% owner and your IRA is 1% owner, you are still never allowed to use the property, work on the property, et cetera, nor is any disqualified person. So until your IRA is no longer any percentage of owner of that property, you are not allowed to utilize it. All right, if you want to sell the property after a few years, is there a number of years you must hold the property? No, completely up to you. We have clients that do fix and flip, so there is no time frame on that. How do you sell without paying taxes? Would you need to do a 1031 exchange? It's a good question. 1031 exchange does not exist inside of a self-directed IRA because you're already inside of a tax sheltered account. So when you're buying a piece of property and you sell the property, all of the earnings go right back into the retirement account. So capital gains does not exist when you're buying and selling inside of an IRA. Do we pay outside of our IRA things like inspection costs? The answer to that is no. All expenses associated with a property, if you're buying in full with IRA funds, must be paid from your IRA. In the beginning of your presentation, you mentioned something about buying international property. Can you please elaborate? So you are allowed to buy property anywhere in the world. And what I mentioned about buying the international property is that certain countries have certain requirements. So you want to check with that country to see what the requirements are before engaging in purchasing international real estate. All right, I understand the titling of the property in the name of Entrust FBO my IRA. Do I need to use an LLC which my IRA owns as best practice for purchasing real estate, especially property in a foreign country? So again, check with that country to see what their requirements are. Some countries don't allow IRAs to purchase real estate, so you have to set up some type of entity, whatever entity is approved in their country to purchase the real estate. So you need to check with them. Now, you do not have to use an LLC. That's up to you, and I would highly recommend consulting with your tax advisor or CPA before doing that, or to determine which is going to be the best route for you to go. All right. Can an IRA buy land and the personal owner build a house? So it's a good question, and I actually get this question very often. At no point are you ever allowed to do business with a disqualified person unless it's at the initiation of the purchase. So what that means, if your IRA buys the land, you personally cannot then go and build on the land because that would be considered a prohibited transaction. You personally are doing business with your IRA after you've already purchased the land in full 100% with your IRA funds. But you can partner with yourself to buy the land, and then you can partner with yourself to build the house on the land. So the answer to that is yes and no. So you can buy the land with your IRA money, and then you can build with IRA money, but you can't personally build, or you can buy the land in part with your IRA and part with your personal funds, and then build part with IRA, part with personal funds. All right, I'm a real estate agent. Can I purchase a property or invest in a property and keep the commission but send all other proceeds to my IRA? It's a prohibited transaction to receive commissions from a property that you are buying. Can a property that hold on a second. Can a property that I own be transferred to my Entrust IRA? I think that's what the question is. No. You are never allowed to buy or sell or transfer ownership between yourself and your IRA unless you're doing an in-kind distribution. You mentioned partnering with someone. I think I heard you say you could partner with yourself, say 50% IRA and 50% self. Did I hear that correctly? Yes, that is correct. And Steve, send me an email and I can give you some more information on partnering. How are the funds in the IRA that are not used for real estate purchase invested? That's completely up to you. These are self-directed accounts, so we do not dictate how your funds are invested. That's up to you. Are maintenance costs paid out of the IRA subject to withdrawal penalties? Absolutely not. That's an expense associated with the asset, and it must be paid from the IRA. Okay, if investing in a Roth IRA is limited to $6,000, what happens to rental income greater than $6,000? Okay, that's a really great question, and it's also a really big misconception. So, income that's generated from the asset is not considered to be a contribution. Those are two completely separate things. A contribution comes directly from your checking account or savings account or from you personally. That's considered a contribution. Income that your asset generates is not considered to be a contribution. So there is no limit on the amount of income that your asset can generate. So if your asset generates $30,000 of income in 1 year, great, that all goes right back into your retirement account. And you can still make the $6,000 contribution if you're allowed to. What about RMDs? I'm not sure what about RMDs. That was just the question. What is the typical interest rate for a non-recourse loan? I honestly have zero idea, but if you want, contact me and I can give you the list of non-recourse lenders and you can call and check for yourself. Can you describe checkbook control option? So I went over this earlier. I'm going to just touch on it very briefly, but if you want, send me an email and I have an LLC document that I can send you that talks all about checkbook control. Basically, you create an LLC, your IRA is the member of that LLC, you open a checking account in the name of that LLC, you direct us to move the money from your Entrust account over to your LLC bank account, and from there you have complete checkbook control. The same rules and regulations apply inside of that LLC, but you just have more control over it, and you eliminate the middleman, which being us, when you pay for expenses. So you're paying them directly from your checking account. Income generated can go back into the checkbook IRA, or does it have to be sent to Entrust as income? So income that your asset generates when you purchase assets through an LLC can go back into your LLC, and then you can reinvest those. You can use that to pay for expenses, or if you want, you can move it back to Entrust and then move it to another custodian. We don't care what you do with it. It's self-directed, so you have control. Can you combine IRAs for more purchasing power? Yes, I went over that in the presentation. You can use a combination of IRAs to make a purchase. Can you talk a little more about LLC investment options? If the IRA was the member of the LLC, that would also have leverage. I'm not sure what that question means. You can send me an email or give me a call offline. Can you review again whether a property manager is required for an income producing property? Property manager is not required. However, you can also not be the property manager. If I liquidate my entire account, how long do I have to repay the money before being taxed? If you're liquidating the account and keeping the money in the account, you're not going to be taxed. It's still inside of that IRA. So I'm not sure if that answers your question or not. What is the typical amount of time to close on a property bought through IRA? It's a really great question. There's a couple big variables here, and the biggest variable being how long it takes the title company to actually do the close. Our standard paperwork review time is 3 business days. My FMV has used annual tax estimates for the last few years. The taxable value is significantly lower than the actual value. Can this be a problem with the IRS? So when you're completing the FMV, that's you verifying to us the value of your property. So you want to make sure that it's as accurate as possible. Could you partner 50% of your IRA and 50% personal money to flip a property? if you do none of the work yourself. Yes, absolutely. How do we pay for expenses during repairs or make property renovations from your IRA? How do I reimburse a property manager for expenses related to maintaining or improving a property that is purchased directly through my IRA? You submit us an invoice and we'll send them the check. Can my spouse be set up as a beneficiary on death of the rental property purchased with a self-directed IRA? Yes, you can list anyone as a beneficiary. And actually, when you open the account, we highly recommend that you list a beneficiary. Is the property manager required for the IRA held property? Again, no, it's not required. Can you confirm that I can never personally transfer ownership of the property initially purchased by my IRA? So you can never take property that you personally own and move it into your IRA. The only way that you can personally ever own the property is the property that's in an IRA. You can take it as an in-kind distribution and own the property that way. If I personally invest in a property in a partnership with my IRA, can I vacation the property? No, prohibited transaction. Can you pursue a traditional mortgage loan outside of an IRA and partner with your IRA towards the down payment? When you're using IRA funds, you're not allowed to have a personal guarantor on the property. So anytime IRA funds are used, has to be a non-recourse loan. I had to purchase an appliance with cash as the dealer would not take a third-party check. How would I get my money back? That's considered to be a prohibited transaction. Typically, when things like that happen, instead of paying for it yourself, you can have a non-disqualified person pay for any expenses, and then you can reimburse them, but you are never allowed to reimburse yourself, and you actually should not have done that. Any social considerations for properties held through a retirement account with regards to evictions in the time of COVID? It's up to you how you handle that. We have no control over it. If you have several 401k accounts, how much per year can you contribute to each account? Does the annual contribution amount apply to each account separately or collectively? It's collectively, but that's also a tax advisor question. Is there a limit to any penalties yearly contribution? Is there a limit or any penalties, I think, for yearly contributions? I think that's the question. So there are limits on contributions, and you definitely want to talk to your tax advisor to make sure that you are qualified to make a contribution. When purchasing with a Roth IRA, how is the income treated? It goes right back into that Roth account and it grows tax-free because Roth is post-tax money. Does bare land purchase need to be titled a certain way? 100% cash purchase with self-directed IRA? Yes. Again, it's going to be titled in the name of the custodian for the benefit of the client's name. So the Entrust Group, Inc., FBO, client name, account number. If the IRA owns interest in an LLC, is the LLC required to distribute a certain portion of the annual income back to the IRA account, or is the LLC permitted to hold the income as reserves? So you can, as you earn income, it can go back into the LLC. You can use that to pay for expenses, or you can invest it in another asset. We don't care what you do with it. It's up to you, as long as you're abiding by the IRS rules and regulations and not doing a prohibited transaction. What is Entrust fee structure? You can actually find that on our website, or shoot me an email and I can send that to you. Can you purchase offshore real estate in a regular LLC for U.S. purchases? Again, that's not up to us. That's up to the country in which you're purchasing the real estate. So check with them to see what their requirements are. I'm looking to purchase offshore vacation rental with a combination of IRA money and through equity in a domestic property. Does this arrangement open up the monies derived from the domestic equity used for the purchase to some of the leverage business taxes you mentioned? Send me an email offline or call me and we'll talk about that in more detail. What are the fees associated with your service? Again, those are online, or shoot me an email and I will send you our fee disclosure. All right, just to clarify, I can put purchases with cash and funds from self-directed accounts. If this is done, does this disqualified rule still apply? Again, you can partner with anyone at the initiation of the purchase, even yourself, any disqualified person, etc. We don't care who you partner with at the initiation of the purchase. Just not allowed to do business with a disqualified person after the initiation of the purchase. Can you review again how you would need to retitle a property for a partial RMD? So if you're taking an in-kind distribution, let's say that you're only taking a 25% in-kind distribution because you only need to fulfill 25% of an RMD. 25% is going to be retitled in your name personally, and the remaining 75% is going to be titled in the name of your IRA. How do you hold title under a self-directed 401k, and does Entrust support self-directed 401k real estate purchases? So the title is going to be in the name of the 401k, and we do support self-directed 401k purchases. It's solo 401k though. I just wanted to clarify that. How detailed does the maintenance of an income property have to be? If I buy something for the property with non-IRA funds, is that a disqualified purchase? Yes. If you bought the property in full with IRA money, all expenses must be paid from the IRA. In regards to how detailed of records do you need to keep, if you're buying directly through us, everything comes to us, so we're keeping record of those. If you're going the LLC route, it's up to you to keep the records of everything that you're doing. How does an IRA account pay for miscellaneous expenses? Again, from your IRA if you bought it in full with your IRA. Can you talk more about income distribution? I'm not sure what route you want to go with that, so send me an email. If you buy via an LLC IRA, does that mean disqualified persons can occupy the property? No, again, just because you go the LLC route does not mean the same rules and regulations don't apply. When you go the LLC route, they do apply. Highly recommend if you go the LLC route that you have a thorough understanding of who a disqualified person is and what a prohibited transaction is. How is Entrust compensated for handling the self-directed IRA? We're record keepers, so we have record keeping fees. That's how we get paid. Can I transfer a property from one IRA to another? You can do that. You have to have the property retitled. While I'm making repairs on the property, can I purchase items at Home Depot at the time and not get an invoice? Again, do not ever, if you buy the property in full with IRA money, do not use your personal money to buy or to pay for any expenses. Have a non-disqualified person do it, or have them send us an invoice and we'll send the money. Does the LLC option also operate entirely tax-free without tax filing requirements? It's a good question. Also a good question for your tax advisor, because we're not tax advisors. Generally speaking, your IRA is the member of the LLC, but depending on what you're investing in inside of that LLC, there could be tax implications. So it's a good idea to always talk to your tax advisor or CPA before going the LLC route. Can I rent the property, or do I have to hire a property manager to rent it? You can rent the property, but you have to rent it to a non-disqualified person. What if the LLC purchase is for vacant land and does not produce rent or only increases in land value? Perfectly fine. We're not monitoring to make sure any of your assets are generating income. That's up to you. How long it take from opening account to transfer my traditional IRA? So it takes about 10 minutes to open the account online, and to transfer the money from your traditional IRA over to a self-directed IRA, some variables. If you have them send us the money via wire, it's typically 2 to 3 business days. If you have your current custodian send us the money via check, it's usually 2 to 3 weeks before the money's in your Entrust account. All right, a self-directed IRA can own properties in its own name. Can it also own properties held in separate LLCs? I think I understand that question. You're asking if your self-directed IRA can hold properties directly and then also have LLCs. And that answer is yes, as long as your IRA is a member of that LLC. You can structure it however you want. Can a disqualified person rent the property at market rate? No, at no point are you ever allowed to do business with a disqualified person unless it's at the initiation of the purchase. Can I repurchase my self-directed IRA house later with my personal funds? No, you're not allowed to buy or sell from yourself. The only way that you can personally own a piece of property that's inside of your IRA is by taking an in-kind distribution. What constitutes property use? Can you inspect the property for damages or assess maintenance needs? This is kind of a gray area. Your investment should be hands-off, but again, there's some gray areas, so I would seek legal advice on that. If you obtain a non-recourse loan to cover the cost of purchasing a home, are you personally part owner and is your IRA a partial owner? No, because you are not signing as a personal guarantor. Non-recourse loan means that you are not signing as a personal guarantor, that if your IRA were to default on the loan, the only thing the financial institution would be able to take would be that piece of property. So no, you are not part owner. Can two different IRAs be used to purchase property? Yes. Again, you can partner any IRAs at the initiation of the purchase. Disqualified or qualified, doesn't matter. Do you have a recommended list of tax advisors, CPAs? Unfortunately, I don't. Can an LLC use 401k funds to purchase office space for the business? So if it's office space for a non-disqualified person, yes. Okay, I want to partner with my sister and nephew to buy a piece of land and construct several spec homes for sale. I have a checkbook account already with LLC. Should we form a new LLC to purchase the land and build the house? And I fund part of this out of my self-directed IRA LLC into the new LLC for this purpose, or is there another way? So if you personally were already part owner of this LLC, it would have to be a new formation. If you already did not personally have ownership in the LLC, then your IRA can be an investor in the LLC. Also, you can give me a call and we can talk about it offline. What kind of fees does Entrust charge to serve in this capacity? Again, our fees are listed online, or you can shoot me an email and I'll send you our fee disclosure. Can you go over the interest costs associated with real estate IRAs? Again, it's online, or send me an email and I can send you our fee disclosure. How long does it take to convert your traditional IRA to a self-directed IRA? So again, depends on how the current custodian sends us the money. If you have them wire us the money, 2 to 3 days. If you have them send us the money via check, 2 to 3 weeks. What crowdfunding sites does Entrust Group have relationships with? That's listed on our fee disclosure, or you can send me an email and I'll send them over to you. Can I purchase supplies while remodeling with my personal credit card and use a credit card statement as an invoice to get reimbursed? No, that's considered a prohibited transaction. Can I borrow from a sibling at the lender on a property purchase with a qualified account if it's non-recourse? So you can borrow money from a sibling. I'm not sure I actually understand that question. On a property purchase with a qualified account if it's non-recourse. So anytime you're leveraging, it has to be non-recourse. It doesn't matter if there's 3 other people that are using personal money. Anytime an IRA is an investor, it has to be a non-recourse loan. If I didn't fully answer that question, give me a call and we can talk about it offline. If you set up an LLC for the self-directed IRA, you do have to file an LLC tax return each year. Again, that's a question for a tax advisor. Can you buy property overseas via my Entrust Group account? Yes, but you need to find out what that country's requirements are. Can interest fees be paid out of the IRA? That's a really good question. So you can either pay the fees out of the IRA, you can put them on credit card, or we can send you an invoice. So 3 ways to pay fees. Can a person move a portion over to self-directed and keep the remainder of their current IRA with their current IRA holder? Yes. So when you want to move money to a self-directed account, you can do a full transfer or you can do a partial transfer, completely up to you. Are nephews considered qualified persons? Yes, they are not considered disqualified. So aunts, uncles, nieces, nephews, siblings, and none of them are considered disqualified. The only time they are considered to be disqualified is if they are a beneficiary to any of your accounts. Will Entrust help transfer funds from another retirement account? Yes, if the money's in an IRA, we actually will initiate the transfer on your behalf once you complete the appropriate paperwork. If the money's in a 401k, you will be responsible for initiating the rollover over to us. If at purchase I use 10% of personal funds to partner with my IRA, does 10% of income get paid directly to me as well as 10% expenses? Yes, that is correct. So whatever percentage of ownership it's split at, all expenses are paid at that percentage of ownership, and all income that is generated is also split at that percentage of ownership. Are the rules the same for the self-directed 401k? So in a solo 401k, they are similar. They're not exact because it also depends on the types of plan documents that you select. So it can vary. Can you please speak more on about combining IRA funds and personal funds for vacant land and building a home you reside in? You can never use IRA funds to build a home that you reside in. That is a prohibited transaction. All right, it looks like that is it for the questions. If anyone else has any questions, go ahead and type those now, or you can always contact me via phone, email. All of my information is listed there on the screen. I want to thank everyone for joining us on the webinar today. Hope you found it to be informative and valuable. If you have other questions, please feel free to reach out to me directly, or you can reach out to your respective business development manager. All of that information is listed on our website. All right, I think that's it. I hope everyone has a great day.